Hi friends, this is Kishore. Welcome back to my channel. Today I'm going to share some of the macroeconomic data and also the global data that was released in the month of July. It's not a financial advice, just for a knowledge purpose only. Let's jump into the show. So the first one is market sentiment. Still, it is an extreme rate, but the one thing is like it came down from 80 to the 78. This is last week heat map. So most of them are okay. Nvidia and Google performed really well. And this is the heat map for the month of July. So most of them are green except very few like Verizon, T-Mobile, RTX. And this is the weekly sector performance. Except utilities, real estate, healthcare remaining a lot do good. And this is the sector performance for the month of July. All are green. The main thing is financial and energy. Financial made a good jump, 7.15%, and energy 7.68%. And this is the Nasdaq rebalance. It happened in the last week, and Broadcom and Pepsico their percentage increase in the Nasdaq 100, remaining all are decreased. And this is the earnings beat data. 68% beat, which is a good one. Beats by 565 company earnings and misses 261 earnings. And this is the sector level net profit margins compared to second quarter of 2022 and second quarter of 2023, except materials and energy, healthcare remaining all are good. One thing good is like real estate performed more than better compared to second quarter of 2022. And this is the S&P 500 revenues are going still up, which is a good sign to the stock market. And this is the stock market performance for the month of August. It's based on the previous past history. The dotted lines are the pre-election years, and the solid lines are the regular years. So most of them are going down in the first 1 week and then bounce it. And this is the next week earnings. So some of the major earnings are coming in the next week, like Amazon, SoFi, IMD, Shopify, Etsy. And this is the indices performance in the last week, and most of them are up. Nikkei is up, Eurostock is up, DAX is up. And if you see the Germany manufacturing PMI, it went below 40. Below 50 means there is a chance of a high chance of recession, but right now it is below 40, which is adding more chances to the getting into the recession. And the Eurozone M2 growth and the inflation is going down. That is a good sign. But the M2 euro rate change is minus 0.5, means the money supply is getting tight. And the China 2023 growth estimates slashed by various analysts like Citi, JPM, Morgan Stanley. They slashed their estimate from 5.5 to the 5. And this is the bond market. So this is the daily charts. All the bonds like 30 year, 10 year, 5 year, and 2 year, all bonds are going down. And this is the energy sector. So crude oil, gasoline, heating, natural gas, all are going up. So if you see here, the regular gasoline price is up. So as we see, the core CPI, CPI, PCE, all data came good, making like inflation is going down. But looks like in the month of July, all the crude oil is going up. Like it's one of the major component in the part of the inflation. And this is the Fed Watch tool. There is a more chance of no rate hikes in the coming months till 2023, end of the 2023. And in the 2024 there is a chance of rate cuts, and high chances in the month of May 2024 there is a 77.95% chance of the rate cut of the 25 basis points. So as we hear a lot of news like soft landing, no recession. So but based on the history, like, after Fed started hiking the cycle and recession periods, so the recession on an average of 27 months, recession came, or median 23 months. So after starting the Fed rates hiking, it takes 27 months or 23 months to get into the recession. So right now it is 16 months. So it's too early to call it as a no recession or the soft landing thing. And this is US inflation and wages. Inflation is going down and also wages are going down. That's a good sign to the economy. And this is one of the important charts. The lot of bearish bets are going on the bonds. So as we already see in the daily chart, bonds are going down, and there is a lot of bearish bets. If the bonds are going down, yields go up. Yields goes up, it's not good for the technology sector. And this is one of the important chart. Less demand for the tech stock hedges. Right now the hedging is very less. I mean, puts are very cheap right now. This chart tells like traders all in buying calls chasing the rally. So means lot of call buying is happening. And this is AI related stocks drove virtually all S&P 500 returns this year. If you exclude the AI related stocks, S&P is flat this year from the January to the till now. But if you include S&P 500 went a lot up. And this is the last 45 days, S&P 500 did not fall more than 1%. If you see a lot of green candles, very few of the red candles, and the red candles also very small one, except the Thursday one. And this is Dow Jones winning strikes. So continuously, Dow Jones went up 13 days. So in the past, it happened very few times, like in July to 1929, 12 days, and December 1970, again 12 days, in January 1987, 14 days. And this is year over year percentage change in the global liquidity. Still, it is going down. The global liquidity is like US, Bank of Japan, Bank of Canada, Bank of England, and Europe. And this economic output is set to slow this year, except India and China is above 5% of GDP, and rest of them are 3% or 2%. And this is US real imports year over year change. It is going down, which is not a good sign. And the number of bankruptcy filings are went up, like 4 week and 12 week moving average. It spiked in the last few days. And this is the consumer squeeze. So consumer credit card balances year over change. It went up to 17.2%, which is the highest in the recent time. And also credit card interest rates are up like 20.92%. And this is the SPY chart, daily chart. So last few days it is range bound between 450 and 460. As we see in the month of August first week, it can go down, but if it goes down, the 440 levels are the one of the good support levels. And I'll talk about this 422.99 horizontal support line later in my Tuesday video. And this is the IWM. IWM also in the range mode between 190 and 197. If it breaks 190, then it can go up to the 180 levels. But right now, still it is in the range bound, and I do not see any sign here. And the TNX, as we saw, bonds are going down. Treasury yields can go up. Right now, it is at the resistance level. If it breaks, then it is not a good sign for the tech sector. And the QQQ chart, right now it is at 383 level. If it is above 375, that is good for the QQQ. It can go up to 390 and then 408. If it breaks 375, then it can go to the 360 levels. That's all for today. Hope you like this video. If you like this video, please hit the like button. Please hit the bell icon so that you'll get notification whenever I upload a video. Please share this content to any of your friends. If any of your friends looking for similar kind of content, please watch more videos in my channel and subscribe if you like that. Thanks so much. Bye bye.